have a question that came up. I'm so grateful. There is a member of one of my circles, and she asked the following question, and she liked the answer so much, and it was validated by other CPAs and auditors that she knows, that she actually gave me permission to share this with you today. And I'm so grateful for her for allowing me that. She wrote in, a winery sold bottles of wine for $1,000 each, with half of the proceeds from each bottle coming to our nonprofit organization. Nice fundraiser. We booked the contributions as coming from the winery, and this campaign generated about $100,000. The winery doesn't want a tax deduction for this campaign, but wants their clients to receive the tax credit. Is this even possible to generate tax receipts for the clients on the $500 donation per bottle? How would you handle this? So Katie, thank you so much for allowing me to share this question with the world, and thank you so much for allowing me to share my answer as well. The answer is, so first of all, I'm going to assume in the context of this question that we're talking about the tax deduction, not a tax credit. That's the tax deduction for donating to a charitable organization. And I'm also going to leave aside any considerations about tax policy and who is even in a situation in which something would be deductible, if they're itemized or non-itemized. We're going to leave that to the side. From your organization standpoint, and the answer is no, they can't deduct it. And if your partner wants their customers to be able to donate it, this is the three-part structure that needs to be in place. Step one, when the customers make payments, credit cards or checks, etc., those need to be made payable directly to the nonprofit. If they're paying cash, the cash needs to go into the nonprofit's hands. The money needs to go to the nonprofit directly, and the paper trail needs to reflect that. If there's a receipt, it needs to come from the nonprofit. Item two, the nonprofit will pay its partner company their share. So if they normally charge $500 for a bottle of wine, and this time they charge $1,000, the nonprofit organization gets $1,000 and pays $500 to the organization, the winery, for their share. And item number three of this three-step process is the nonprofit will issue their standard letter. Thank you for your donation of XYZ. Thank you for a donation of $1,000 or $5,000 if they bought 5 bottles of wine. And then in that letter always says the tax deductible portion of this contribution is, and then that's where you share the $500. That the extra, the above and beyond that they paid, that the winery is donating to the nonprofit, that's how much goes in the donor acknowledgement letter. And that's how the winery's customers can get a tax deduction. So thanks so much again, Katie, for asking this question and for your giving permission for me to share it here. I hope that's helpful to people. It can be really helpful to both nonprofits and their for-profit partners. When they team up to give a fundraiser, they want to give the maximum possible benefit to their constituents. All you have to do is get it in the right order, have the cash flowing in the right way.